Hello guys, my name is Sam. Welcome back to my YouTube channel. And I hope that you guys have had a very great weekend. On the previous video, we had discussed identifying structure, right? And I hope that you guys have had the time to actually test that out, test yourself out on identifying structure, right? So today we're gonna be using USD JPY in order to actually get clarity of how to use multiple timeframes, right? Now, when using multiple timeframes, you need to have actually 3 timeframes, right? The first time frame, it will be for direction, right? The second one will be structure. Now, me just saying direction and structure doesn't mean that on the first time frame we are not going to be using structure. We are actually still going to be using structure, but on a higher time frame perspective. That means that it will be giving us a long-term direction bias. Okay. And then on the third time frame, which will be your smallest time frame compared to the above ones, this will be your entry time frame, right? Now on the direction time frame, this is where I generally like to use the daily time frame, right? And then on my structure, I like to use the 4-hour time frame, whereas on the entry time frame, I like to use the 1-hour time frame or the 15 minutes time frames, right? You might actually be having other means of identifying your entries and your structures. Just make sure that you have 3 time frames which you can build your entry reasons on, right? Now, looking at this pair USD JPY, we can currently see that the market is pushing to the upside, right? And actually using past data here, we can also see that from the past down there, it could actually also be in an uptrend, right? I can load this up here, and then we can check how the market has been moving from the past data. So we can actually see that even from the past data here, we had market pushing to the upside, making higher highs and higher lows here, higher highs and higher lows, right? And then the market had created a level in the market, right? With the high of the market, of the market being here. So if we had been at this area here, we would know that we are looking for an opportunity to push to the market to the upside. Why are we looking for that kind of an opportunity? Due to past data here. Past data has been telling us the market has been making higher highs here, higher highs here, higher highs here, as it moves to the upside, right? And making higher lows here and here and here and here, right? So for us to actually consider looking for selling opportunities, we would actually like to see this higher low being broken and retested. Now we can see that here we actually had a breakout, but that breakout didn't retest here, right? For you to be able to enter a trade to say that this is a valid retest, you need to use the lower time frames for your structure. That's why I said this time frame, it is only going to be used for directional purposes, right? Let me clear this out. So right now, zooming in on our most recent data, right? We're firstly going to identify the highs and lows of the market in order to see where the market could potentially return, and also give us entry reasons. So we can see that here, this was a previous high in the market, right? And this here was actually a previous low in the market, right? Now, what we can see is that we had a low here, and then we had an equal low here, since we are actually in the same price, right? Now we had a high here, we had an equal high here, right? Now, this is actually a fake breakout where most people get trapped here to say that I've seen this long imbalance candle here. So then that means that the market will continue pushing to the upside from here, right? Now, when you're using market structure using lower time frames, these are things you are able to see to say that on the lower time frame here, I didn't get my confirmation to show me that this is actually pushing to the upside, right? Now, using market structure, you can be able to avoid a lot of things, right? So now looking here, this was our high, right? Our equal high. And then now we get the market pushing to the upside, creating a higher high here, right? Creating a higher high here. Now that higher high then pushed to the downside. This is where we are identifying our higher low, right? Now we did get selling buying opportunities at this level here using structure. We were able to see market break structure and retest, giving us a nice reversal pattern here to push to the upside, right? Now, when you're having market which has formed a level here of significance, and you see the market moving into that level, forming higher highs and higher lows like this, which is actually called a consolidation movement, right? Because we can see that the market has pushed impulsively to the downside, but it has been moving in this form to the upside, right? Now, this does not necessarily mean that this price here would then start falling to the downside. No, when it reaches that previous high level here, right? What you need to look for is to look for structure, to look for levels where the market would have to break first in order to say that, okay, now this market is actually pushing to the downside. And which levels are those, right? Let me clear this up. Now, remember we had our high here, which got retested here, right? We had our high here also. Now, I wouldn't say the market was retested here, right? I would actually say the market was retested here. Why am I saying that? Because I can see that the market didn't make a full breakout here, right? We then had an imbalance candle here to the upside with another imbalance candle pushing to the downside here, right? Now, this can be a retest of level or structure on the lower time frames here, right? And I would actually consider this one here as my new high, right? Why am I considering that? Because this was actually a full move here if you are using the higher time frame, like the weekly time frame. You can actually see that this here was actually one move here, a huge move, and then we had our corrective move to the downside here, giving us a higher low here, right? The market has then now pushed to the upside, and again we can see the market now it has come back to that level of structure, and to actually it has come back to that level of structure, right? Now, we won't say that this market is at a level of structure and then now we just gonna enter the market blindly. No, we are gonna go down to the lower time frames and identify structure on that time frame, because right now we know that the market is actually pushing to the upside. Remember, we saw that the direction here is to the upside, and we are going to look forward buying opportunities. How are we going to be able to confirm our buying opportunities is going down to lower time frames? So we will load up the 4-hour time frame in order to identify the price formation or the price structure at current structure, right? Now that is what is going to be able to help us in identifying what is actually going on, right? Now this is the 4-hour structure, and immediately when I look at this, I can see that this is our previous high here, right? And this is our previous low here. Remember, this actually looked like a retest on a level that we couldn't see clearly using the daily time frame, wherein we had identified that this area here is not the one that we were actually taking as a breakout, a new high in the market, right? This here is the previous high of the market, right? Now this is what I had said, that okay, the market now just pulled out of the level impulsively, and then the market then came down to close that imbalance in that market, right, in this level here, right? Now the market had pushed to the upside. Now this is what I call a true higher high here as compared to this high here, right? Now, in that sense, I will be looking for price to come back into this level here, or an approximation of the level being here, which is what had happened here. We can see the market going down consolidatively, so, right? Now, when we look at this, we can see that we had price forming levels of structure here. We can see that we were waiting for the market to actually break this level here in order for us to say that the market is now pushing to the upside, right? So right now, the market has actually came back down, right? From our higher high here, the market has pushed to the downside here, right? Now, for you to actually say that, okay, now this is our higher low as compared to these past lows here, you need to actually have okay, let me say facts, or you need to have reasons for your entry into the market, right? Now we can identify that this is previous high, right? And then we had market form falling wedge here before pushing and breaking this level here, right? And this is our previous low here, right? Now, what you can do in order to enter this market when the market is like this and you cannot actually just identify structure out of the blue, or you cannot identify structure here, you scroll down to a lower time frame. You move down to a lower time frame. Let us mark out this level here. Okay, we've marked that level out. And now what we're gonna do is go to a lower time frame and check what is happening here, right? Now going down to the 1 hour time frame. Now this is the level that we have identified, right? Now, when you look at this, you can see that the market is making lower lows as it moves to the downside and lower highs. We can actually see market pushing to the downside here, right? We can see it having equal highs here, and then we can see market pushing to the downside here. Now, what are you waiting for? You're gonna be waiting for, let me remove this and put something, it should be much nicer. Now you actually, right now, your structure on the 1 hour time frame, it is still to the downside. Now the market could actually just continue to the downside, pushing to the downside like this, right? Now, what you must wait for is for you to actually be patient enough to say that you're going to wait for the market if it's consolidating, failing to break this low here, and then wait for the market to break a level of structure, right? Once the level structure is broken, you can either use your entry reasons there in order to enter the market, right? You can use your entry strategies in order to enter the market there, right? Now, when you wait for a level of structure to be broken and wait for the retest to happen at a level of structure, it will give you actually a pretty good risk reward ratio where you know that your direction is to the upside. On the 1 hour time frame, your structure, this is your level of structure retest, and then you are actually waiting for another confirmation in the market to actually give you that confidence to enter the trade, right? Now, this is actually just using multiple time frames, using the same structure over and over again, right? So guys, I hope that this has been very helpful to you, so that you saw that using structure with multiple time frames can actually give you nice tradable opportunities at a very low risk, so that in a sense that you know what you are entering on, and actually build your confidence when you trade the financial markets. For me, I'm going to leave this here and hope that you guys practice, backtest this strategy with your pairs and see how your pairs react once they break a level of structure, and use your entry strategies.